disappointment when it comes to third quarter earnings. This is Southeast Asia's biggest lender. It reported net income of 822 million Sing dollars versus estimates of 1.14 billion. However, DBS is predicting 3% income growth this year. It says it will expand to double digits come 2018. Let's get it over to Bloomberg Intelligence's Asia Pacific banking analyst, I should say, Diksha Gira, who joins us now from Singapore. Diksha, this is the only one out of the big Singaporean lenders to have missed. What happened?
Yeah, so I think it's pretty well known that the oil and gas issues led to some of the allowances that has caused this decline. The sector has been causing a bit of stress for the Singapore banks through all of this year. And Singapore being the largest manufacturer of jack-up rigs and it's dominant in, drills and offshore vessels, I think it shouldn't be a surprise. And I mean, we'd be kidding ourselves if we'd said that, oh, the banks were actually okay. The numbers do look logical, and I think it's a good thing that DBS went on and made these allowances now. Otherwise, it's much better than kicking the can down the road. Or possibly evergreening these loans. So I think it's a good move. The problem could have been much worse if we were seeing the latter. Also, in terms of how they've done it, it's a very smart thing to do because the IFRS 109 kicks in next year, and if they wouldn't take these allowances through the income statement, these funds would have to be shifted to the shareholders' equity, and we all know no one likes volatility in that.
Well, tell me something, Diksha. With a stronger oil price that will help these exposures of the banks lending there in Singapore, because we've had a lot of problems with them lending to some of these oil services companies and beyond.
Yeah, so I think there's a common perception that oil and gas, it's the price that will make a difference. I don't think that's just the surface of the problem. So if you see, the question is about a sustained improvement in the oil price outlook, which we haven't seen really yet. And if you look at it, these are mostly support companies for oil and gas majors. So what it boils down to is that how much capital spend the big majors make in these in oil drilling, and that means the demand for the vessels, for the charter rates for these vessels will go up. That is the indicator that should help any material improvement in the Sing Bank's asset quality situation. Also, poor cash flows and the higher leverage of some of these small players, those are the real issues, and the valuation price for these ships, those are the real issues. It's not just the oil price.
Well, exactly. So tell us about the three local banks. Is it all doom and gloom when we get their earnings?
Well, I wouldn't say that. I mean, the margins are a critical piece of the puzzle. As we've seen, the flow through the Fed rate hike hasn't come through for the Singapore banks, and when it did in the third quarter, we've seen that competition eroded some of the margins. DBS margin actually fell a little bit this quarter. But the good news is that the lenders have actually been able to diversify their earning sources. So you've seen wealth management is doing very well for all the three lenders. DBS wealth income is actually up 21% year-on-year in this quarter. AUM was up 23%, about $195 billion. So that's all going very well. The insurance distribution income has been very well for DBS as well. The deal with Manulife has worked, and it's led to a steady stream of income for the bank. Also, lending has been picking up quite fairly, so trade obviously helps Singapore. So it's not all doom and gloom, but yeah, I hope that the oil and gas situation will pacify towards 2018. We might see some pain in fourth quarter as well.
Thank you, Diksha. Just got some breaking news coming through regarding Qualcomm here. And